let's chat about what the market construct is looking like. We've got Krishna Sanghavi, CIO, Equity at Mahindra Manulife Mutual Fund, joining in on the show right now to talk about exactly that. Krishna, hi, great to have you in the show. Krishna, we were just looking at some of the internal indicators, the high frequency data, all of it supposed to, is supporting the India equity markets right now. Tell me, when's the next big push going to come in from? And it's going to be only led by some clarity on tariffs, perhaps?
Clearly, tariff clarity is something not only India but a lot of global economies, global markets participants are awaiting. So that will clearly help. Maybe it lays down a nice roadmap for India to further increase its manufacturing capabilities in terms of ability to supply from here to global markets, mainly US. Let's not forget, US is the largest consumer in the world. So to an extent, any comfort, any what do you say, a small window opening up for Indian players to offer their products to US customers can clearly help. Yeah, there might be some challenges on tariff front on the reverse side where some Indian industry might have some incremental competition coming up from a reduced tariff if at all some industry has to go through. But yeah, so tariff is clearly one icon. Another part really remains how global capital market flows play out, especially with FPIs moving money across markets, whether you call it uh, developed markets, emerging markets on one front, and within those DMs or EMs, how relatively each country shapes up on valuation stroke incremental growth curve. So on a growth part, yeah, India is placed nicely. That 6.5% GDP growth rate for FY25, more likely to be in somewhere in similar range for 26 based on current estimates. So nice, double-digit nominal growth rate on back of this real GDP. So that economic part broadly remains intact, and all we need is some sort of clarity, maybe a little bit more global.
All right. Hi, good morning, Mr. Sangvi. This is Shrishti also joining in. We just concluded the earnings season, and this time the expectations were quite muted. But what we get to understand is that the companies have performed a little better versus the muted street expectation. And yes, the banking is one of the consensus buy coming in on the street. But help us with your sectoral calls at this point in time. Anything that stood out for you with respect to the earnings season as well?
Yeah, sure. So I think you're right. Result season is better than the expectation, and partly the muted expectation clearly helps in judging the output as better or maybe worse. So for a change, we having a better result season, and it's a nice part is really well spread across. In fact, if you look at Energy 500, that 7-8% earning growth as a combined basket and profits is broadly spread, across the space, whether you call it BFSI, call it commodity aggregate basket of oil and gas, metal, cement on one side, or the resource consumers, which is the entire non-BFSI, non-commodity piece. It's nicely spread 7-8%. I think from a sectoral mix, one interesting observation has been that it's a quite a bit of divergence within the same sector. You have some companies growing at 15-20% and some really lagging up. So that's a company or a stock specific earning trajectory always remains relevant in Indian markets because you got a nice large number of companies to evaluate as well as economy doing what it's doing. So always find some winners, some people leading the economy and the earning trajectory. Sector wise, clearly BFSI stands out as a nice beneficiary on multiple fronts. Your core hypothesis remains intact, as long as we have a nominal GDP growth of double digit kind of thing. You have lending piece in place, money credit demand will be in place, so lenders benefit. India is generating income far more, and a lot of this income is available for savings. We also have an advantage of for capital account convertibility, which allows this money to be retained in India for domestic savings. So that helps the capital market piece, the maybe the asset management company, the broking businesses, wealth management business, because finally that money comes back to Indian financial markets in whichever shape and form for investment. So yeah, BFSI is clearly some sort of a a beneficiary on this, sectoral front.
So let's watch it for the BFSI speed. But Mr. Sanghavi, the government capex spending is seen to be back in the month of March and April, and that's what the macro data is suggesting. But nobody's really talking about the PSU pack right now. It's not the flavor of the market right now, but do you believe that it can be the flavor of the market going ahead? Any particular pocket that is looking good to you?
Yeah, so as a broad trend, yes, PSU companies are, on their own growth path. As we know, in last couple of years, the capex story is, driven more by PSUs vis-a-vis, private sector till now. So I think those PSUs are on their way to do their capex and have a much larger balance sheet and higher profitability going ahead as and when those capex materializes. So yes, PSU across the space, it's more choosing on valuation, but broadly, one looks at, power on one side, you look at PSU banks on other side, you look at maybe defense and the other capex related themes. Broadly, it's good. Yeah, some adjustment on valuation always helps uh, adjusting the portfolio stance. But the PSU as a pack also is a interesting investment opportunity.
Okay, so that's the take coming in on that. But Krishna, hi, morning. This is Snehi also joining in the conversation. I was reading through the views that you've sent us, and you've maintained your FY25 GDP outlook at 6.5%, saying that it looks reasonable following the 3-year strong growth of 8% plus expansion that we've seen. Yesterday, we've had Nomura's outlook coming in, wherein they've slashed their outlook to 6.2% compared to the 6.5% that you are looking optimistic on. Help us understand what's driving this optimism when it comes to our overall macros. You also have the MPC outcome at the end of this week. What are you penciling in for that as well?
Yeah, I think FY25 we broadly ended with 6.5%. The expectations are that FY26 we can have a similar number. Uh, One good support, for this year is clearly the monetary policy stance, which is accommodative. If you look at last year versus this year, both the liquidity in the system as well as the cost of that liquidity, in terms of interest rates are lower than last year. The availability is higher, and we've realized that monetary policy, creates that additional support to the growth. From a government side, the broad stance is pretty much similar. Yeah, you're right. Maybe 6.5 is a current estimates, and as based on the event which plays out. Notably, tariff can be one variable which can maybe change this upward or possibly marginally downward. But I think 6.5 is a good rate for India in the current context to assume.
So that's your take on the GDP going ahead. I was just looking at some of your portfolio holdings, and it looks like you're pretty positive when it comes to the sugar space, because I see EID Perry as one of your top holdings in your portfolio. Now, yesterday I was reading about the sugar sector, and we've had some word coming in from the industry players wherein they've asked the government to hike the process of ethanol blending. How do you think the sugar industry is slated to grow ahead, and what's your view on the sugar space?
So sugar industry, let's look at core structure. India is a large population. Maybe the domestic demand for sugar is in place from a consumption perspective. As economy, we are moving ahead, possibly slightly more better lifestyle, more processed food. Again, sugar consumption can technically rise. From a supply side, dynamics of sugar, while yeah, we've been historically running, excess supply of sugar vis-a-vis the demand, but the ethanol blending program has, taken reasonable, share of that excess supply. So broadly, we are now balanced on sugar where uh, the excess supply is partly absorbed in by way of this ethanol blending and little bit from marginal export stroke rise in domestic consumption. So demand supply is in place, and little bit pricing power, which either because of ethanol blending, ethanol prices, or maybe the sugar price can clearly help sugar companies going ahead.
But with this, Mr. Sanghavi, we let you go on that note. Thank you so much for taking the time out and speaking with us.
Thank you.
If you like this video, then like, share and subscribe to ET Now.